Hey traders, Raghi here with a follow-up from Friday's SPX walkthrough because we want to see, hey Rag, okay, on Friday we had a choppy day, but today wasn't really that choppy. Did that formula of the hourly price movement range, volatility support and resistance, and the daily price movement range, support and resistance, how did that fare today with a far larger move than we saw Friday, than we saw on Monday? So let's take a look. Anytime we have a strategy, we need to test it in all the different seasons of the market and all types of price movement. And until we've done that, we really shouldn't turn the corner and say, hey, this is going to work. So the question I have a lot of times is, Rog, do you back test? Never. I forward test. In other words, we put the trades on to see what the result is. And we have a basic litmus test for how many trades we like. For me, I look at time, minimum 6 months. And usually I don't like to unveil a new strategy or indicator or anything until after a year of just pounding it and trying to break it, not trying to prove it, trying to disprove it, right? And so when you get hundreds of trades in, now you have a sample size of what's real. So we're kind of on that path, and let's follow up Friday's video with this one. All right, so with that lead up, it gives you a really good idea of where we are. This is today's S&P futures. So the first thing to follow up on is, okay, Rog, if we're looking at the ES, what two time frames are you looking at? This is the 5-minute chart, and this is the hourly. The 5-minute chart is where I'm looking for my entry trigger, and the hourly is where I'm, for the most part, looking at targets. Now, if you are an SPX trader, the hourly for the targets is going to be particularly of interest, okay? If you are a micro S&P mini, or SPY trader, the at or even slightly in the money options for all those three are very affordable where you don't have to go out of the money. So SPX is a little bit different where a lot of traders do have to go out of the money. We'll tackle both those in this video. So first of all, Rog, how do we get in, right? The fill starts the whole process. Follow through is what pays us. You can see that right in here. And you'll see I put the alert that we set up in the room in this corner as well, so everyone can see the way we think about SPY. Notice that we're looking at the 536 SPY calls, but I could also look at the 5400 level of the ES. I could look at the futures contract. So you can see how early in the morning we set this up, and we continue to fine tune it, both the SPY and the QQQ for that matter. And by the way, both the SPX, the SPY, the MES, and the ES, all of them have options. So keep in mind as well, I'm talking purely long calls and long puts. So right in here, you can see we got down to the hourly price movement range, and you'll see this wick in here. So this is very much, if you're kind of visualize the way in which I think about trading, it's absolutely this image right here. We're waiting at the plate. I love this image. We're waiting at the plate, that's you and me, and we know exactly where our batting average is excellent, right? That's what great traders do. They know their zones, they don't do a darn thing until the zones get there. For us, the zone is the hourly price movement range, and you'll see that right here. If you want to look at your own charts for reference, this is going to be the 10:30 a.m. Eastern 5-minute candle. All right. So at that level, you'll see we sunk down into the hourly price movement range. A couple of things we really liked about this trade that's different than Friday's setup. We were already above the previous session close. We're far more in a bullish territory around the anchored VWAP. And it was a more bullish to neutral environment as opposed to what we had on Friday, which was sinking into the hourly price movement range and a little bit of bearishness. They both work, but this is far better. Right? So if you're saying, Rog, what's textbook? Today's example is far better. This is really a textbook example. All right, so then we want to buy the at or slightly in the money, right? ES, MES, so mini or micro, futures options or calls, or heck, buy the futures if you're comfortable with the leverage, or the SPY at or slightly in the money calls. These are all very affordable when we get down in here. So I said, hey, if you're an SPX trader, what do you do? All right, so it's the same trigger, but we're going to go on over here to the daily price movement range because now we're asking ourselves, what's a realistic out of the money SPX option? So it's very simple. This trigger right down in here, and notice all of this is on the ES. Rog, why are you looking at the ES? This is trading nearly 24 hours a day. It's actually a 24-hour, not 24, but it's almost a 24-hour market. That means when we ring the bell at 9:30, I'm already seeing my hourly price movement ranges, my candles, my indicators calculating actively. So I have a read before the bell, and I certainly have a read at the bell. And it's a great advantage for those of you trading any of the variety. And by the way, I don't want to leave the XSP out. It just usually doesn't click in my head immediately. But yes, the XSP would be valid here as well. So there's your out of the money. What we want to do is focus on the out of the money strike somewhere in the gold zone. So obviously, the lower edge is going to be more expensive. The center of it will be a little less expensive. And the outer edge of it would be the least expensive. So yes, you could have been looking at SPX up above 54.30. Even though we're in the first and second standard deviation today, please don't presume this. That's a gift. So now the 54.20, the 54.30s, these are in the money in a big way. And if you trade ES, MES, SPY calls, or SPX, you know that once you're in the money and pretty well in the money, this is now a monster trade. But please don't start with the assumption that we're going to go to 54.60 or 54.50. That's too far out of the money, and you're going to need an outsized move to get that option in a nice profitable level before the time decay of a 0 days to option expiration issue. Now look, 0 DTE is going to apply to SPY and it's going to apply to SPX. So we want to think about an early trigger and we want to see it profitable as we get closer and closer to the end of the day. Right now, it's 3:21 p.m. All right, so now what? Okay, so I've picked my out of the money strike where it's affordable. I know my trigger. Now leave it be. Here's where it gets tempting. Here's your trend. Right? Up, candles, green. The tempting thing sometimes, if you miss this, let's say you missed this, the tempting thing is, well, let's buy puts. Please don't. This is a strong day. It's a day that's showing us all the bullish indicators. Please don't try to pick a top. I know it's tempting, but don't do it. The other question I get is, Rog, in this area, I get that you're telling me to go long calls. Absolutely. I love a directional long call play like this. But if you're a fan of selling premium, remember, you can also short the put and take advantage of the expectation that not only are we going to move higher, but that the time decay is going to continue to erode the value of the option. So I'm hoping you're starting to see the value in setting it up with this. Hourly price movement range on the 5, daily price movement range on the 1 hour. And here's just another example of, even a better example than Friday, because we were above the previous session close. And there you go. And that's what we're looking at for a move like this. Please don't expect those outsized moves. If you get them, it's a gift. And then as you can see here, it's 23 after 3. That's where we want to remember, all right, that time decay factor for the SPY, for the SPX, is starting to kick into gear. All right, so I mentioned a couple strikes, and you might say, all right, Rog, but that doesn't sync up with the SPX. What would the strike for the SPX be? So you can see here we sunk down into 53.80, right? And so when we sunk down there, I'm going to go grab, so let's do this. And I mentioned we can grab anywhere from around 54.10 to say 54.30. And these are 5 wide, so we can go grab, in this case, 53.15. Yeah, 53.15 if you'd like, up to even 54.35, right? If you want to be kind of on the outer edge, right there at the upper edge. But let's grab something in the middle. Let's not go too cheap or too expensive. Let's grab the 54.20s. And let's see what the 54.20s did today. So what I'm going to do is I'm going to go grab the 54.20 option prices on the SPX. This is really easy. TOS lets you graph the value of the option so you can kind of see what we've done today. So this now, we've gone from the ES, I've shown you where the SPX target out of the money strikes would be, and this is the value of the 54.20. I just picked the middle of the range. I didn't go to the very lowest. I didn't go to the very highest, right in the middle of the range. So at 10:30, you can see here, these things were trading, let's even call it a little bit more. It's $1.61. Let's say you got a $1.81 or a $2 fill, right? for whatever reason, maybe the spread, whatever. So let's call it $1.81, $2. Yeah. So what do we do now? We leave it alone until what? It reaches that gold zone, or at least gets close to that gold zone. You can see what it's done all day. This is a monster trade, not because we're over leveraged, but because we waited for price to sink into a level of support, and then we've tactically looked at historical volatility to find the out of the money. Gang, these past 2 videos I've been sharing because a lot of folks send me emails about how they're struggling with their S&P trading. Any variety of which, S&P, MES, right, ES, SPY, SPX, XSP. This is the way you do it. And this is what I teach in the Mastery. Whether you're trading Apple, whether you're trading Nvidia, whether you're trading Tesla, whether you're trading crude oil or gold, these zones apply. But it's a little unique when it comes to an out of the money strike. So I hope that's helpful. And that gives you an idea of where it's been, where it went, and the timing of it. And that is what we're looking at as we wind down the day. And if you looked at the day trading clock conversation that we touched on in the previous video, time of day matters, right? Not only does it matter that we're going to have certain FOMC members speaking like we did today with FOMC Bostic, but there's a natural rhythm to every day, and we use that rhythm to our advantage. Hope this helps. Hope this is a good follow-up. We took a very narrow ranging day example from Friday, and today we've got a second standard deviation move on the S&P. It's the same process. Hope that helps. I'll see you in the next update.